S&P 500 stock market crash. Well, it's a little early to be calling it a crash, but we have hit the top of this super long-term bull channel, which we haven't been up here since 2014. And we also have found our first bear channel, which I painted a little bit early, a day or two ago in my Bitcoin video, but uh, you can definitely see it today. We're in a bear channel on both Bitcoin and the S&P. And then just to go back, this is the 2008 crash. And you can see when we get to the top of this bull channel, we've never tried to break out of here. And, you have examples where you tap it and cross the whole channel, crisscross a couple times, cross the whole channel. Or here at the 2014, this is like 2 years of hanging out in the top half of the channel. So just being in the top of the channel doesn't mean we're going to like collapse or something. But let me zoom in on this. This is our first bear channel on the S&P in a long time. I mean, we had these really weird stabbing down moves. These are not really consolidating bear channels. Uh, yeah, we haven't had a proper bear channel on the S&P since maybe this Volmageddon area back here. But if we go in here, you can see that we bumped our head on the top of the channel. I mean, like this whole year, we were in this super hot little bull channel, and then we finally pulled down out of it, and we've just kind of been stabbing, higher, stabbing higher, climbing with risk, and you get these kind of flat top shapes. These flat top shapes are big guys selling out. When whales sell out, they make these flat shapes here, and then for sure this grinding out flat shape on the top of the channel is big time selling. Like nobody is letting it go above there. So this is a big deal. Rejecting off the channel is a huge rejection, but we didn't just reject off the channel. We fell out of our support area. We fell underneath the bear channel, crossed it, and then, yeah, I think the Bitcoin video, I don't know if we had this tail yet, but as soon as we threw this tail inside of the bear channel, like we're definitely in a bear channel now. And I just painted the two, nearest channels here, so you could see kind of where we could go from here. But I guess just now, I expect to pull down to the bottom of the channel here this week, and then just this midline is kind of a target to see where we're going. And I don't know which channel we would be in. It's pretty easy to poke through two channels. Like this is a target that makes sense. This is a target that we could likely hit either way. We could come down and bounce up to it, or we could just kind of consolidate down to it. Those are two pretty obvious bear targets. And then this is a super resistance bull target, but I don't even see that right now because we just threw a tail and rejected out of this middle bear channel, so I don't think we have time to make it up there now. I doubt we would. Yeah, so I don't think this is like the top of the everything bubble like exploding, but I think that we could check back here to the midline and maybe all the way across the channel. But I think most likely we're just going to stay in the top half of this channel for the next bunch of months. And the bottom half of the channel is probably here is the most likely easy target. This is a more dramatic one and shorter term. And that's just kind of what I'm looking at. And we have a bunch of other things. I showed the Bitcoin bear channels as well. Like Bitcoin is pulled down into a bear channel. We have treasuries, like if you do like the 10-year US 10Y, the 10-year yield, the treasury yields are breaking out to the upside, which just sort of technicals are sort of lining up for the market to do a pullback. And we're just in our first bear channel now. And then, oh, you know what? Let me show this. this is the spread. Let me show the yield spreads. This is the 10-year minus the 2. Go on a weekly. Take the log off. All right, here we go. So this is the spread between the short end of the yield curve and the middle of it. And what you can see here is that we just kind of cycle. So the yield curve spreads wider, and that's good for banks because they make money on the spread. And then it gets tighter, and then we have to do some kind of monetary policy. So that's exactly what happened here. We got to the bottom of the spread here, and then we did all the crazy MMT monetary policies and all the purchasing of bank bad assets through, through all those 4-letter programs and everything. It was a super aggressive monetary policy here at the bottom, and that's the whole COVID fiasco, and people are saying it's the shortest recession ever, but no, that's not where a recession happens. Recession happens here, halfway up the yield curve. Every time, that's where we've gotten the recession. This is like the 91 recession was not a big deal. The 2001 recession is a huge deal. And then, obviously the great financial crisis is here. So you get monetary policy changes near the bottom, but it's on the way up that you get the recession. And usually you'll see it kind of check back, and then you get a recession. Check back, and then you get a recession. So in the GFC, we did a couple wild wobbles. Usually it's more smooth, and you get a recession about halfway up. But you can see here that we're about halfway up, and we just did a wobble, and now we're continuing back to the upside. So just in terms of yield curve spreads, this is recession territory. We're in recession territory now. Like sometime in the next 12 months, probably, maybe in the next 12 days. If the stock market does pull down, like reasonably right now in these bear channels, people are gonna start freaking out. I don't know. I have a bunch of charts on just random individual stocks that look fine. Let me just check out gold. Gold has been in a bear. Oh, that's not good. Oh yeah. So gold is just continuing. Man, everything is just falling into bear channels now. Oil is. Oh, let me get back into the screen where you can see everything. Yeah, oil's breaking up. So that's interesting. But yeah, when you get bearish charts on Treasury yields and the stock market and Bitcoin and gold, like all the monetary assets are flashing bearish, and the risk assets are lining up into bear channels. So yeah, let me just go back. Oh, what's the dollar doing? The dollar is just hanging out strong. So that's just all bearish indicators. Let me go back here and let's do some momentum analysis and see where the momentum on the stock market is now. You can see on the MACD here. Oh wow. Are we in negative? Oh, we might have bearish momentum now. I didn't expect this. Okay. Let's check the MACD out. Oh wow. Yeah, we're already in bearish momentum territory, and also flipping over. Oh, this is really bad. Oh, how did we get all the way down here? So you can see here, let me pull the MACD up a little higher. So just basically reading the MACD. If you're in the top half of this chart above the middle, then that's bullish momentum territory. And any kind of swinging around in bullish territory is going to send the chart higher. when you cross over to the bottom half of the chart, that's when you're in bearish territory. So if you swing back and forth, that's just kind of neutral. Or if you hang out around the middle, that's neutral. And the stock market will probably go sideways. But what we have here is we're already in bearish territory, and you can see it flipping over to the downside right now with this move. So this can definitely lead to, well, to a big move down or several moves down. I didn't think we'd be in bearish momentum already. And then you can see on the RSI, when you move from the top half of the chart on the RSI into the bottom half of the chart, that generally will correspond with a move down in the market. And we've been just kind of sticking in the top half of the RSI for a while. But you can see back here when we had those two big stabs down, we're almost crossed over to the bottom. And then the COVID crash, we crossed, from way up high all the way down and stayed down. And so this is kind of a bearish look on the RSI when you cross from the top half to the bottom half and you stay down. And then these ones, these are kind of blow off tops, but we didn't make it all the way down. So here, so far, we haven't made it all the way down, but we're picking up negative momentum, and we rejected off the top of the bull channel, which is huge, and made it into a bear channel. So that's it. We're just in a bear channel on the S&P. It should be ugly or boring for a while. We might get a big rip to the downside. Stocks tend to make more dramatic moves to the downside. They tend to climb slowly and then they'll rip to the downside faster. But man, I don't know. Look at this thing. This is the craziest upside chart ever. Yeah, and you can just see it kind of curving and losing speed. And then the last couple of months, we just kind of fell out and just got weaker, and then boom, fell off the top of the channel. So I think at this point, it's pretty safe to call this thing a dead cat bounce. And I don't know, I like this. After looking at the momentum, I like this target a lot. I'm just going to paint that, let's call it 41.50, October 11th. That's like 2 weeks from now. I think we're breaking 42. We're going to come down here and check out the middle of the channel. That's what I'm calling. This is not investment advice, as always, just checking it out and seeing what's going on. As far as a short play, shorting the S&P is kind of boring. You need to find individual things that are going to crash way bigger than the normal market. But once we get in the middle, you can climb through bear channels and get back to the top, or kind of bounce around, climb out of here. It's entirely possible we just check down and stay in the top half of the channel. I think it's about 50-50. If we come here, I think it's going to be a 50-50 if we cross the downside or go back to the upside. And it looks like we're going to go here. So it'll be really interesting if we pull down what's happening. Because a big crisscross of the channel, below 4 or something. Yeah, people would be going nuts if that started happening. But I don't think that we're doing that yet. I think we're going to hit the top of the channel again. Probably the end of this year or the beginning of next year or something. We'll probably be back up here at all-time highs, hitting the top of the channel. That's what I think is most likely. We just pull down now, and then we'll probably come back up. And then the second tap on the top of the channel is a big risk of crashing. As far as this being the top of a big long-term top, I think it maybe is a 20% chance or something. It's definitely a chance. But I'm not calling this as the super top. I'm just calling this as we are actually in a bear channel. We're in a bear channel on the S&P. That hasn't happened in a while. NAS is also in a bear channel, just crossing. And the Nasdaq chart is a little bit of a kind of upward triangle. I don't know. This chart is just kind of distorted. I really don't like to use it for technicals. But here's one thing that I've mentioned before. as we're coming sort of towards the top of the bubble, is you can have a rotation out of tech and growth, which everyone is super high on tech and growth, but tech and growth relies super heavily on tons of loans being available. And once you get halfway up the interest curve cycle, that the money just becomes unavailable. Like, I'm not saying like, oh, Elon Musk won't be able to be an innovative person. I'm just saying like the available funding from banks to drive, the growth stocks just decreases and they underperform as you get towards the top of the bubble. And then the stocks that perform are like materials and minerals, miners, commodity kind of stocks. And so I think, tech kind of checked down in February a little bit. We saw it go a little bit weak. Yeah, this chart, I don't know, it's not quite as clear. If you look at Tesla or ARK or something, like, you can see February was a big deal. So anyway, here's Tesla. Like, Tesla's just kind of climbing through bear channels now. ARK may be one to short if you think we're gonna like rotate out of tech and growth. And so I think ARK might be a good short here, because this is just super high risk, like, growth stocks. So if the Nasdaq is gonna pull down, ARK will probably pull down twice as hard. So a potential play would be maybe short something like ARK as we pull down from the top, and then the next bull up might not be tech and growth. I mean, we might bull up on things like copper. Like, FCX is Freeport. This is basically a copper miner, which has done really well on the copper cycle, and it's stalling out now. And so we'll just watch the pullback and see. Like, uranium has been bulling, and this is a pretty bizarre one. It's like doing this like right in the face of other stuff coming down. But things like this, like copper miners, uranium, are just general mining companies, like super small cap miners, like Load. We'll see if these hold up, see if the market pulls back, and then it could be stocks like this that explode to the upside after a pullback, and not things like ARK and Tesla this time. And I think that's quite possible. And silver and gold have not been very strong. I think this has a lot to do with Bitcoin. So it'll be interesting. It'll be interesting to see if Bitcoin keeps consolidating down. And I did a whole Bitcoin video here, but I mean, I think Bitcoin's just gonna crisscross this bear channel, maybe stab through, and then there's big time support. But I do think it's possible to get down here below 30 short term on Bitcoin, because we rejected off the bull channel, fell under the bear channel, rejected under the bear channel. And so it looks like Bitcoin wants to come down. I didn't look at momentum, but let's check it out. Yeah, so Bitcoin's going back into bearish momentum territory, which should lead down. You can see here when we were in the bearish half of the chart is when we did all of this bearish consolidation to the downside. And so we're going back into bearish territory here. Yeah, anyway, that's an interesting look at everything. I think there's a lot of people talking about things crashing right now, but no one's being very specific about how that's happening. But I think that this is what's up. Is we're just going into a couple bear channels, and we might see the rotation out of tech and growth right now, and then we might see one more big run up to the top, which could be a few months, or it could be like a couple of years or something. But I think we might have miners and minerals and commodities and things bulling after this pullback. That's what I think might be happening here. So that is, the stock market crash. and I think it's actually going to crash a little bit. So heads up, be safe, and happy trading.